Okay, so yesterday's trade, I just wanted to sort of review that from the lens of Goldbach. Okay, so we were down here, and this is the 243. I'll just go to this particular. Here we hit that particular, I think, previous day low. Okay, then I believe we were looking for some setup in this area. So let me half share. Let's see. Minus one. Still, I think it was half shifted. See executions, they're there. It's not on this account. Okay, no problem. Play. Okay. I think this is what I was looking at. Let's see. Just move it forward. Okay. So again, I'm not 100%, but I think this is where it was, where I believe we had taken a trade. And then what I wanted to uh, communicate is, if you have this confluence and then you're looking at targeting, then the run should end here at equilibrium. Okay. And what do we have? We have this POI taken. We do have some inversions. We have a swing. Okay. What I would have really liked to see is it come below this low one more time, but nevertheless, there is an order block in the order block area. Then we shift structure. Okay, and there might be some SMT, maybe not with the ES, but with the YM. Okay, there might be. So when you have all of those happening, then it's a better trade. So you have the fair value gap. It can go anywhere, like LV breaker, even MB, but it shouldn't go to equilibrium and come. That's not probable. So now we are almost at breaker, and I would take I'd put a limit order, just cover that particular low and target here. Okay, so let's see, goes to breaker. It's near equilibrium, but not there. Okay, Takes a long time. Okay. Right. So we get tapped in here. What has happened here? It's created more PO3 liquidity. Okay. PO3 liquidity. And that's okay. PO3 liquidity. Now see what goes on. Yeah. So I think this is the reason I was not sure if I had taken it over here. So I was waiting for it to come past this again because it had failed to reach a major level. This is also a PO3 liquidity now, right? So I don't think I had entered there. Now this is again, these are things that as you forward test, back test, these are subtleties you need to kind of understand. Okay. So now let's just see what happens. So we went up. There is an order block now in the order block area. This one I'm happy to take because it's taken this particular liquidity. There is a failure swing. There is an SMT also. Okay. So the SMT in this case is that week. No, the SMT is with the body in this case, right? So if you see the body, this one has been swept, but this body failed to sweep. So that's a failure, right? So the failure asset is supposed to start running. So there is an SMT, and in YM also might be there might be some confluence there. Now that was the entry, just running, but your limit order is there. Okay. Your limit order is right at that where you have this 0.17. Okay. It's not where the imbalance is, where the fair value gap is. It is at that 0.17 because in a different time frame, you might have a uh, imbalance. So trust me, like this is the better way to do it. And now we are expecting price to reach over here, and that's it. Okay. So SMT, this is taken. We do have that sweep below and these lows. We get market structure shift, fair value gap, fair value gap area. Two times. Just keep watching. 3, 4. We are at lunch hour. I think I'll have to just keep it somewhere. I don't know how long it takes, but I think it takes a very long time because it's high resistance run. If you look at how dollar was working, again, fair value, again, what is happening here? It's creating more. It's failing to reach important levels. As you can see, even here, when we came, swing was left, right? Everything in the middle is distraction. We know the target is here. This is all distraction. Retracements will happen, whatever will happen. But it's valid till this red line is not touched. Okay. I think I'll just create. Still not touched. Equilibrium. No. Okay. Where did our Goldbach go? It's kind of shifted somewhere. right? So it took from entry, and even if you miss, okay, like immediate thing, if you miss, it's okay, put your limit order later. As long as it's not reached equilibrium, anytime it comes back. Okay, so this entry was at roughly at 11, and that's also macro time 11 within 11:10. So let's say 11:10 till uh, macro of 3 hour 3 p.m. Right? It failed here to touch, came back again, right? And a lot of times when you see this kind of pullback, it's normally coming to the liquidity void level, and then it's going to run up, right? So I know that I think we took many trades, buy sell here, but like I would really suggest that even if you're doing that, just keep this perspective in mind, right? And that's why I was saying that in the group. And even I think many times the trades that were taken in AM, especially with NT2's group, they all had this thing going. Okay. So we don't have to take out partial here, here, or anything. You know, this is telling you clearly where it's going. Of course, you can take partial, no problem. But when these retracements are happening, they're happening to create PO3 liquidity. Okay, this job is done. There is really no reason for market to come. And a lot of times, not only like in a single run, but between sessions also, when you know the function of, let's say, London, and you're looking at maybe a larger dealing range, for example, the next one, which is, okay, we were running 243, okay, and you might say, okay, but we normally run 81. If I put 81, it might not fit, but we'll try that, okay? So let me just put the 81. When you have these large range days, 81 is not going to work in my experience, okay? So we'll see. Go back to replay. And 81. See, this is 81 minus 1. We are on the 1 minute chart. Okay, so when you're here, you see that it's 1 minute is not fitting in those. So you can go about it in a seconds chart. Yeah, sure, you can do that. But like I wouldn't suggest, right? So 1 minute is not, at least when we are here, it's not fitting in. Here maybe somehow it is fitting in, but as you can see, till equilibrium of that, right, of what we were dealing with, that equilibrium was up ahead. It's further up down. It was somewhere here of the 243 where we had TP. It's around 3. So not in there, I think. But it didn't touch, it came down. Very sudden, tempting shots, and that's it. Right? So that was the equilibrium of the larger PO3. So that's how you have to work out. Okay, so here the candles are not fitting, so you're not in this, and that will happen when you have large days, like these candles compared to these candles, whatever other days, not that big. So you'll have to do it one step higher, which is 240. And Anyway, 243.81, these are the two intraday you will be looking at, but also look at the 729 always, right? So you will have a higher time frame perspective, and generally it will be the 1 hour, 4 hour in Nasdaq, which will give you 1 hour is good, right? So where are we in this 729, which are a shared low with 2187? Shared low is here. We are in this, we left the one below, and now we are here. Where are we going? We are going here, right? So I think last week or whenever we were leaving this and we were talking about something, I was expecting it won't actually go ahead much higher, whatever the liquidity may be here yet. The reason is that the way it happened, and it was a Friday, I think, uh, yeah, somewhere here, Friday. Yeah, Friday. Like some people were expecting maybe these, but it won't do that. The reason is that it just went in and there was no order block, etc. properly formed. There was, I didn't see, it just went up like that, right? Just went up straight. So whatever it was doing to make more um, for later PO3 liquidity this entire week. And that's the reason when you're here, see the chop. So when you're in equilibrium, it's going to happen this way more often than not. So you can expect that, right? So similarly, if I move it down over here, we will see uh, if I move it down in this range, see in equilibrium, right? So when we are in equilibrium, you can expect, and especially over here, it just went up. So it would spend a lot of time. Now these are things you have to see. Okay, just going back up. So this is something you will always have for your um, higher time frame buys. The 729 will give you, right? So when it's here, it's not going to go up. Like I don't expect it'll tap something here and it'll just go. It will come, okay? And in this case, it tapped into the fair value gap area. 4 hour, let me just check. Yeah, so you have a 4 hour fair value gap exactly in the fair value gap area. Okay, so what's not so clean about this is the order block is down here. Okay, now there's something I need to see, but your order block was formed not in the order block area. Rallied up, leaving fair value gap. There was a shift in market structure and spent all that time, came back, tapped into it. But look, it went past equilibrium, right? So you will not take this because this is not the way it works. I don't think it's just going right. Even if it is doing something, it's gonna chop around, it's gonna do a lot of stuff. But I think that it's definitely not getting here, let's say, uh, until it comes below this. It has to, I feel, come below this, make the setup, and then I don't think this is a run. Although sometimes I've seen that if it reaches the opposing breaker, and this is more of that nature where opposing breaker to fair value on it can work out. I'm not sure. I don't think that's the right way to look at it. But here the 4 hour is looking very perfect with this, right? If you see the how the bodies are respecting levels. Another thing, this is important, right? So when it came lower, it failed to reach an important area. Again, failed to reach an important, failed to reach. But when it was going up, it was kind of filling up or able to reach. Even here, when it came down, it failed to reach. This is what PO3 liquidity. Here, look at this. Perfect. Failed to reach, came lower, tapped, reached, done, left that, right? Um, and then whatever was left hanging over here, these rammed. So this is another thing you have to look at. Okay. So GB will tell you a lot of things. And again, even in other time frames, same thing, PO3 liquidity, all that. You'll get in this other time frame as well. What were these not reaching levels, right? So so when that's happening, you can also in one way in the short term say, hey, it failed to reach. Now I'm getting this, so it's bullish, right? Failed to reach, so it's bullish. So it's bullish, but it's for later that it's going to get taken. So I hope this was helpful, and uh, let me know what you think about it. So, so this trade is like, one shot, one kill. Timing is right, everything is working. Just leave it. Don't have to deal with multiple trades. It's more risky the more time you spend, right? So just hold on to one thing. Sure, you can take your partials, but TP out at equilibrium.